it has been estimated, and by the way, I'm in favor of all forms of alternative energy too. It has been estimated that we have now spent over 40 years just under $5 trillion in alternative energies. And that investment has reduced the market share of fossil fuels from a high of 81%, 82%, all the way down to 81%. It took $5 trillion to reduce the market share of fossil fuels, admittedly in a growing market, by 1%. How much cash would it take to reduce the market share of fossil fuels before 50%? And where might that cash come from?
The Financial Survival Network. Now more than ever.
And welcome. You are listening to watching the Financial Survival Network. I'm your host, Kerry Lutz. You know, when it comes to investing in the resource sector, there's a lot of noise out there, but there is one standout. He's been a standout for decades. I'm talking about Rick Rule. Honestly, Rick, you have forgotten more than probably I will ever know. Hopefully you haven't forgotten that much. I mean, our age difference isn't that far apart. But hey, find his work over at ruleinvestmentmedia.com. Rick, you're having your conference in Boca, which is a 30-minute ride from my home. So I am really looking forward to being there. Probably have a meetup if some of you guys send in emails that you're going to be there, kl@kerrylutz.com. Link to sign up for the conference. And I haven't been there in a few years, obviously pandemic. Last year I had other obligations. But what is the feedback you're getting from attendees, sentiment towards our sector that's become the Maytag repairman of Wall Street?
Well, I suspect that the attendees at my conference probably are more resource-centric and probably have had better experiences with the resource market than the broader public. Understand that these paid conferences generally tend to attract investors whose timeframes aren't measured in weeks or hours. So I think that among my attendees, the sentiment continues to be pretty positive. You know, Kerry, we've taught for 4 decades that a bear market is the financial equivalent of a sale. And if you would like to buy assets, you're better served by buying them cheap. There are a variety of participants in the natural resource business that are probably better described as traders than investors. And for them, the fact that they might have to wait over a long weekend to harvest their gains is, of course, anathematic. But that's not the community that we attempt to serve in the Natural Resource Investment Symposium. I would point out, too, as we've talked about in earlier shows of yours, pardon me, that the market is really bifurcating. We have at least 2 junior markets. There is one market, the junior market, that I would describe as populated mostly by the lame, the halt, and the blind, that deserves to go lower because they have no feasible reason for existence. The market among the companies in the last year that have been demonstrating good results, irrespective of whether they're development stage or in the exploration stage, has really been pretty good. The market has rewarded good results, but good results have been scarce, and as a consequence, the market is soft. I guess I have one further comment, Kerry, which is that in a broad sense, I think there are 2 sentiment factors that weigh against the resource business. One has been the resilience of the economy in the face of higher interest rates, which I think has made many investors less fearful. And fear investors are often good investors, good gold investors. Mm-hmm. The second would be the fear of recession. And the fear of recession deters investors around broader resource themes like copper and themes like gold. So from a narrative viewpoint, I would suggest that at least this year, that the winds have been headwinds rather than tailwinds for the resource sector. The consequence of that, though, is particularly in out-of-favor sectors like coal and oil and gas, the market has been unbelievably cheap.
So looking ahead, gazing into your crystal ball, understanding the limits, as Yogi Berra once said, prediction is very tough, especially when it's about the future. Do we see a rebound in these sectors, the coal, oil, gas sectors? There's not a bear market in gas in Europe right now, and in Asia, still trading many multiples over what the U.S. price is. With all the global uncertainty, and of course, who knows what's going to happen with the weather? Do we see a reversal from last year's decline in prices there?
I think absent a real recession, that the conventional energy sector will do well. The free cash flow that these companies are enjoying are uniformly the best in history, or at least since these statistics have been reported. There are the coal companies, as an example, with 30 or 35 years reserves that are trading at 2.5 times cash flow, in effect in excess of a 30% earnings yield. That's cheap by any measure, and it self-corrects. Many investors who haven't bothered to take a look at the numbers are concerned because the big thinkers in the world are telling them that we won't be burning any more coal by 2030.
Sure.
The problem with that is it isn't true. The largest demand year on record for coal was 2022, and it looks to be handily eclipsed, in 2023. And the same in the oil and gas side. In the oil and gas side, in the near term, of course, markets work. Natural gas got priced too high around the Russian invasion of Ukraine, and the consequence of that is that markets worked. The markets responded, particularly in the United States, by producing lots of gas, and the price fell. But if you look at the price discrepancy, between natural gas and oil in the U.S. market on an energy equivalent basis, and then also the discrepancy in price between U.S. natural gas and Canadian natural gas, for that matter, and seaborne liquefied natural gas in Asia and Europe, you will see that these discrepancies, these deltas, are too great to continue. Now, it could be, if we have a synchronized global recession, that the deltas collapse to the downside. But that isn't what I think is going to happen because of the incredible utility of fossil fuels. I think what you're going to see is that the delta will be resolved to the upside. I note, too, that the big thinkers of the world, while simultaneously encouraging the oil companies to invest more in drilling so that they can reduce the price of gasoline, are telling them that they're going to put them out of business by 2032 or 2033. Hardly a way to incentivize the $1 billion of investments which are required. By the way, Kerry, one final comment. The International Energy Agency has estimated that the global oil industry, including the parastatals around the world and including prominently the Russian companies, have been underinvesting in sustaining capital investments to the tune of $1 billion a day. In a capital-intensive business like oil and gas, failing to invest to maintain production is a recipe for declining production, which means that those companies which are generating good cash flow today, but also investing enough sustaining capital in their business that they'll be able to continue to produce, almost guarantees, with the sole exception of a synchronized global recession, outstanding financial results in the 2-year time frame, the 5-year time frame, and the 10-year time frame. So I feel good about that. And by the way, I picked those industries out simply to comment that there are some sectors of the market that, rather than being cheap, are ridiculously cheap. This isn't meant to disparage other resource industries. It's just to point out, I guess, the contradiction between the narrative and the reality in the market.
When they talk about sustainable energy, think about it. Oil has been sustaining, hydrocarbons have been sustaining civilization and led to an expansion unparalleled for 150 years, Rick. So isn't that the definition of sustainable energy? And hey, I love electric, I love solar, all of that. I have no gripes with it. But is the alternative really the sustainable alternative, or is it just linguistics that they're playing with us to make it look like, oh, it's geothermal, it's solar, it's wind, that's all sustainable. But the fact is, nothing has been more sustainable than oil, natural gas, petroleum, other than when we were burning fires and we had wood, right? We'd use wood.
Well, certainly, Kerry, one definition of sustainable is economically sustainable. I know your sense of humor, and this next quote will make you chuckle. Comes from Goldman Sachs, by the way. It has been estimated, and by the way, I'm in favor of all forms of alternative energy too. It has been estimated that we have now spent over 40 years just under $5 trillion in alternative energies. And that investment has reduced the market share of fossil fuels from a high of 81%, 82%, all the way down to 81%. It took $5 trillion to reduce the market share of fossil fuels, admittedly in a growing market, by 1%. How much cash would it take to reduce the market share of fossil fuels before 50%? And where might that cash come from?
From the IRA Act, of course. I mean, we all that.
Yes.
It's absurd. And when they talk about sustainable energy, they always lump in hydro. When you look, every country's sustainable energy, especially Canada, huge portion of hydroelectric dams, which they're totally opposed to because environmental aspects, all of that. And honestly, there's a lot of issues with hydro when it's done like the Three Gorges Dam, admittedly, but still most of the renewable energy, quote unquote renewable, comes from hydroelectric. So that's
I don't want to suggest that any form of extractive industry is harmless. I want to point this out, though, Kerry, and this is important, separate and apart from the fact that I make my living at it, and a nice living, mercifully. There are 1 billion people on Earth with no access to primary electricity. There are 2 billion people on Earth with access to unaffordable or intermittent electricity. Those people want to live like you and I live. And I don't understand how it is morally justifiable for me to say to them, no. When the debate goes to carbon, the big thinkers in the West, the WEF and their ilk, are suggesting that responsibility for carbon, irrespective of whether you agree or disagree with the global warming and carbon debate, just if you take it as a given for fun, the big thinkers in the world, the Bidens, the Trudeaus, the Merkels, believe that carbon generation should be measured on a per country basis. Those poor countries with a lot of people believe that it should be measured on a per capita basis. And the poor countries, I think, correctly point out that over 90% of the carbon inventory in the atmosphere that has been generated by human activity has been put there by the developed West. And those poor countries suggest that if we're going to reduce the carbon loadings, that in the future you have to pay back some of the damage that you did in the past, which is to suggest that ratepayers and voters in the developed West are going to have to pay the vast majority of the cost of reducing carbon loadings in the future. And that ain't gonna happen. Whether you think it should or whether you think it shouldn't doesn't matter. It isn't. And we need to prepare as investors and taxpayers and ratepayers for the world it is. not the world that the WEF and their ilk suggests that we should aspire to.
Agreed. And just wait. These people are the ones that when they walk into a room, they flip that light switch.
Yep.
They know the lights are going to go on. But if they follow their very own policies, maybe they have generators and they can stay off grid forever. But, the rest of us, not so much. Hey, so talk about battery metals, lithium. The government is like the Godfather, and they basically made all of these nickel producers, near-term nickel producers, lithium producers. They made them an offer through the IRA Act that you can't refuse, right? You'd be insane to just turn away all that free money. Now, you and I both know when the money comes from the government, it's not free, but they're certainly the winners in this argument, aren't they?
Well, let's unpack some of the things you said. It's odd in my case, as an example, in the uranium business, to go from an icon of evil to being a beneficiary of government largesse. Frankly, I preferred my old relationship with them. I considered it to be honest. That is to say that they professed their hate for me in no uncertain terms, which I always felt to be glorious. I would suggest to the industry, too, that he who pays the piper calls the tune. And the more government nexus that you accept by accepting their handouts, the worse your future is likely to be. What it does evidence is a sea change in voter perception. And I think it also goes to two underlying trends. The first is that the world needs more electricity of all types, not just for electric batteries, but also for providing power to those people who don't have it. And increasingly, some of that power or some of the capacity is going to have to be in distributed storage, which is a fancy way of saying batteries. So I believe that this electric transformation and battery transformation is real. The second trend is, of course, economic nationalism, a wholly regrettable trend in every regard. But the truth is, around rare earths as an example, because the Chinese produce them so efficiently, nobody else bothered. Now there's concern that we need access to supply and price is perhaps less important. And I think those two things, the fact that the electorate is looking at the necessity of, poor pun, electrification, at the same time that the big thinkers in the world are looking at the strategic implications of an increasing balkanization of the world supply chain, means that increasing acceptance of the components of this electrical revolution are becoming acceptable in all sectors, including government, which is, this is maybe the first time in my life since I was a geothermal investor that I have actually existed in a sector that had official, at least tolerance. I've never experienced that before.
Yeah, it's they've made it a no-lose proposition, at least in the short term for these.
Yeah, in the short term, right.
You think we're going to wind up with a glut of lithium? And the other thing is batteries are a very moribund industry. The last innovation we had, basically Edison invented, or right around there, he perfected the alkaline battery. And that was where he made most of his money in World War II, I guess it was, or World War I. I don't remember. But then we got nickel metal hydride batteries, which I used for notebooks. And then it went to lithium ion, which was 20, 30 years old. Nobody cared about batteries until like 5 years ago. Now the race is on. You can only imagine what type of battery is going to come up, human ingenuity. And we're investing in today's technology for a rapidly emerging sector that probably isn't going to use lithium or that much of it. And maybe they'll use nickel, but maybe not as much. They're behind the curve, and it's going to be a disaster.
But we are coming into a real battery revolution. There is money being spent by smart people developing better batteries. And the truth is that there's going to be no one technology that takes all, because the function of batteries will be as varied as a watch and a grid.
Yeah.
And so, as an example, utility scale, molten sulfur, vanadium. There's going to be probably 20 dominant technologies for subsets of the distributed storage or battery markets. With specific regards to lithium, Kerry, if I've learned nothing in 50 years of resources, is that markets work. The lithium prices are now up about 400%. The markets will work. Lithium is not scarce. What's scarce right now is processing capacity. Lithium demand has outpaced substantially the ability that we have to mine existing resources and also to process that. These very high prices will lead to manufacturing and processing efficiencies at the same time that they increase supply. So don't look for the current craze in raw, lithium resources to continue. Particularly, when I grew up in both the geothermal and the oil and gas industry, lithium was considered scale. It was waste. And to the extent that we developed technologies, which we could do at these prices, to extract lithium from either geothermal brines or the saltwater brines associated with deep natural gas production, we're going to be wading in lithium. Now, that won't happen. It won't happen for a couple of years, but the lithium bulls need to understand that markets work. The cure for high prices is everywhere and always high prices.
Yep. And you can see it here, just like nat gas.
Right.
So we're not going to get away from this. We're not getting away from petroleum. We're not getting away from battery metals. They're going to evolve, obviously, and supplies are going to go up because it's attracting the capital, right? Both private and public, and it's a feeding frenzy. Basically that IRA Act, Rick, gave battery metal producers, strategic minerals and metals, a blank check, because there is no limit to the government gravy train. They didn't say we're going to pay out X billion and then we're done. It's like, hey, bring it on. So there are going to be government warehouses full of lithium just sitting there, along with the Ark of the Covenant and whatever else they've got hidden away in these U.S.
I actually suspect, Kerry, that they'll walk it back. I suspect that they made this promise because this promise suits some near-term parochial interest. This wouldn't be the first time in my career that the government has offered up something which I know this will come as a surprise to you, they didn't deliver. And I wouldn't suspect that this ongoing gravy train will be one to the extent that you suggest. I think that they'll have some act in the future, or perhaps some non-act, some torpor, that will actually save the taxpayers from the current folly. But I think that you will see a circumstance in the very near term where high quality promoters, or maybe how could I put this, high efficiency promoters who are unable to attract capital in the market will be able to attract capital from the voters.
Yeah. Well, there was a guy named Harry Brown, I'm sure you remember, economist.
Well, yes.
And he termed the government the accommodating loser.
Right.
Because the government's willing to lose money when no one else is willing to take the risk. Now you could say, well, NASA, computers, and biotech, and all these things they invested in, and we could argue till the cows come home whether they would have evolved anyway. But the fact is, the government is there, but there is a limit to how much loss they're going to take, and whether it's a guy at the Treasury Department that sounds the alarm, or whether everybody kind of wakes up to the reality. But right now, though, it's a no-lose proposition, isn't it?
Well, no lose to a point. Remember this, you still need to permit these projects. So as an example, while we are busily encouraging all electrification metals in the United States, we're also denying exploration and operating permits in the Duluth complex. There's a wonderful source of copper in the United States called resolution. It's over 1 billion tons of 1.5% copper, 3 times the average mine grade worldwide in the United States. It was discovered 30 years ago. It's been in the permitting morass for 25 years. The highest grade undeveloped copper camp in the United States is in northern Alaska, controlled by Trilogy.
I know.
And the Biden administration, over local opposition, including the local First Nations, turned down the road. So when we talk about wallowing up to the trough, my suspicion is that they may give us some incentive money at the same time that their constituency denies us the ability to operate.
That is a conundrum, an enigma wrapped up in a conundrum for sure. And yeah, they make all these statements, we got to produce more, but will they, talking about permitting, and nobody ever talks about such arcane topics, do you think that they're actually going to put it in for the FDA kind of, when there's a new humane drug, they just, grease the skids, push it through, and it gets approved, whereas everyone else has to spend multi-billions? Is that going to happen in battery metals?
I think if we had a crisis, the answer to that is yes. They showed with COVID, rightly or wrongly, that you can obviate the FDA if there's a political crisis. In other words, if the voters and focused interest groups demand it. I suspect, as an example, if we have blackouts in California, and I think we might,
when we have
that, permitting more access to electricity, or heaven forbid, drilling some gas wells to obviate the crisis, may suddenly reintroduce itself. This is a time-honored technique of everyone in politics. I think it was Obama's chief of staff, Rahm Emanuel,
yes,
was famously quoted as saying, "Never let a good crisis go to waste." And certainly to the extent that we experience in the United States the effects of our underinvestment in energy and critical materials over the last 30 years, to the extent that a real crisis develops, I suspect that we may get the ability to develop projects. We'll see. We'll see. I hope, given that a crisis is a necessary precondition for that, I hope we don't experience it.
Yeah, well, some things are inevitable, though, and the folly of politicians. I mean, this is nothing new. If we go back, I love talking with you about economic history, too. Go back to the railroads, right? And we wound up with all this excess rail capacity in the late 1800s. And then guys like J.P. Morgan made their money buying up the distressed assets, cutting off the unnecessary operations, and, rationalizing the industry effectively. And so there's nothing new about this. It's just a different form. And nobody was happy with the railroad industry. They wanted it, but, like the Transcontinental Railroad, they were paying them $1 million a mile or whatever the equivalent was back then. And they were supposed to meet, but then they missed each other. And then, the inspector said, wait a second, you guys, they were going to build 2 transcontinental railroads if they were left to their own demise.
Of course.
There's nothing new under the sun here. That's what I'm saying.
The government often pays for activity as opposed to accomplishment. I understand completely.
Yeah. So, all right. So quickly, gold and silver, underinvestment, declining production numbers, all of this, wrap it up with that. Tell us your insights into these markets.
Well, first of all, I need to say I'm delighted by that. I'd like to own more gold in particular. And the fact that the price stays lower for longer gives me the ability to average into gold for longer, which is great. Remember that a bear market or a soft market is the financial equivalent of a sale, and I like to buy goods on sale. And I feel the same with the gold equity markets. If people ask me why, of course, there's a very different answer. We have rising nominal interest rates, while some of the inflationary pressures, probably as a consequence of rising nominal interest rates, have subsided. And I think on top of that, Kerry, all of us have been lulled by 40 years of benign economic climate. I mean, the period 1982 to 2022 was probably the most benign economic climate in the history of humankind. And the consequence of that is that people don't scare as easily as they once did. I remember going back to my breaking into financial markets in the early 1970s. You know, we'd come off the boom years of the 50s and 60s. Most investors couldn't spell gold, you know, a four-letter word. The experience that they had in the 1970s caused all of that to change. And my suspicion is that the next 10 years are going to be substantially less benign than the 40 years that preceded it. I think, too, that when people express a declining concern into inflation, that they're more narratively oriented than they are empirically or arithmetically oriented. As an example, and I don't need to tell you this, Kerry, but it's important for your listeners. When people talk about the CPI stated rate of inflation, if you have a headline number that says the goal for core inflation is 2%, that core inflation ignores food and fuel. Your listeners can tell by looking that I like to eat. But much more tellingly, the CPI stated rate of inflation, allegedly a cost of living index, ignores tax. Tax is the most important budget item of every working household in the United States. Tax for the average person consumes more of their income than shelter, transportation, energy, and food combined. And the idea that a cost of living index doesn't include the increase in direct and indirect taxation is an absurdity. Now, I assure you, Kerry, if I didn't have to pay the tax, I'd bitch less about the index. But the truth is, when people talk about the tepid nature of inflation, I think they're talking about two things. I think they're talking about attitudes that were formed over 40 benign years of declining real and nominal interest rates. And they are talking based on an understanding of inflation that uses measurement metrics that are fraud.
Mm-hmm. Yeah, plain and simple. It's, yeah, well, you know, the government wants to make everybody an accommodating loser. And inflation is the way they do it because it's so hard. It's so hard to measure. It's so hard to detect. It's only when you go and you have certain aha moments like, wait, I was paying $10 a pound for that steak, and now I'm paying $22, where the light comes on. Or I realized that I was paying in the summer $300 a month for my electric bill, and now it's $330. And that's not even that bad because I'm in Florida. We have the cheapest rates, but, you know, then you get glimpses, but it's, you know, then it becomes an awareness, and then it becomes people just getting out of cash. Remember that in the 70s where you didn't want to keep the cash because it was deteriorating, depreciating before your very eyes. So, hey, the conference, upcoming conference, you got a lot of companies, a lot of speakers there. Obviously, it's evolved over many, many years. What do you feel is the biggest reason that somebody needs to attend virtually or otherwise the conference?
Well, I guess this is an anti-tax. Imagine if your government said to you, if you don't feel that you got your money's worth, we'll give you a full refund of all the taxes paid. If you don't believe that you got your money's worth out of our symposium, whether you attend physically in Boca Raton, Florida, or in the live stream virtually from the comfort of your own home, If you don't feel like you got your money's worth, email me and I'll refund 100% of your tuition. No questions asked. I would appreciate it if you wanted a refund, if you told me why and how we can make the service better, but that's not a condition. So the financial risk is all mine. How can I do this? 30 years of offering financial education products. I've always had a money-back guarantee, and I've refunded about 1/10% of the tuitions I've charged. I do that because we have a very attendee-focused conference. In the first instance, we have a wonderful range of paradigm originators, big picture thinkers, Daniela Prinz, Daniela Martina Booth, Nomi Prinz, Jim Rickards, Bill Bonner, all these kind of guys. Wonderful big picture thinkers, but not the kind you see on CBC. If you agree with that worldview, and you have to agree with that worldview if you are accommodative of natural resource and precious metals investments, then we have a range of analysts and portfolio managers who have stood the test of time, not people who came into the markets 3 years ago, but rather people who came into the markets 30 years ago. Much more importantly, though, Kerry, we have the living legends. We have a group of entrepreneurs who have built multi-billion-dollar companies from scratch, bull markets and bear markets, and they can tell you how their experience building billions of dollars of wealth has made them better investors and how you can become a better investor too. Not out of a textbook, but rather as a consequence of building a multi-billion-dollar company. Finally, attendees have told us for 30 years that exhibitors at our conference are content, not just advertisers. The consequence of that is that no one can exhibit in the conference if their stock isn't owned in my personal account, in accounts I manage, or in accounts managed by my former employer, Sprott Inc. Now, sadly, Kerry, it is not true that every stock I buy goes up. But it is true that every exhibitor at the conference is one that we have vetted well enough that we have invested our own time and treasure in, which is very different from any other conference I know. The normal qualification to be a conference exhibitor is a pulse and a check that cashes in reverse order of importance. So I think for those reasons, and by the way, you don't have to come to Boca Raton, although I would encourage it. We will live stream this. You can watch it in the comfort of your own home. And whether you attend in person or virtually, you will have access to the conference recordings for 6 months. It's impossible in the 48 hours of the conference to learn every lesson that we propose to teach. And having the ability to review the conference material over time, I think is, really critically important.
Yeah, couldn't agree more. And I'm really looking forward to being there. Hey, if any of you out there are going to be in Boca or thinking about it, reach out to me, send me an email, kl@kerrylutz.com. Would like to have a little meetup there since it's basically my neck of the woods. And if you got a question for Rick, same thing, kl@kerrylutz.com. We've got a link so you can sign up and attend the Rule Symposium, either virtually or in person. Love to hear from you. Rick, it's always a pleasure. Thanks so much for stopping by, and we'll see you in Boca.
Kerry, the pleasure's mine. I look forward to seeing you in Boca too. You, of course, will be able to stay in the comfort of your own home, but your listeners should understand that the Boca Resort is truly one of a kind. Michael Dell has spent $1.4 billion on it. Rooms in the tower, which are normally $1,300 a night, we turn to attendees for $300 a night. So we attempt to give people a good deal in every aspect of the conference. I look forward to seeing you there, Kerry. I look forward, too, to your attending the speaker and exhibitor boat cruise and also the attendee boat cruise, which have been prominent entertainment events at my conferences for many years. There's a lot to be said after we've worked your behind off all day to going out on a nice boat in the Intercoastal Canal, enjoying the beverage of your choice. We look forward to delivering value in every aspect of the conference.
And the cruise up the Intercoastal by Boca, it's really kind of breathtaking. The homes that you see there and just the natural beauty of the area. So I will definitely be there. We'll see you soon, Rick, and be well.
Thank you, sir.